Welcome back to Investing Talk Podcast. Today we're jumping right into one of the crypto mining sector's, well, most dynamic names. Really aggressive. The big question we want to tackle for you is this. Is Cipher mining a good time to buy right now? It's been such a volatile ride for this company, lots of expansion, and honestly, the price action has been fascinating to watch. We've gathered the latest reports, looked at the charts, even picked up on some of the industry chatter, all to give you a clear picture. And hey, if you find this discussion helpful, please do subscribe, like, and comment. Let us know what you think. Also, definitely leave a comment if there's a specific company you want us to take a look at.
That's right. We're trying to go a bit deeper than just the headlines for you. We'll break down Cipher mining into really three key parts. First, that recent wild price performance and the technicals may be driving it. Second, the fundamentals, what's actually going on with their operations, because it's pretty substantial. And third, what's coming up, the events, the potential catalysts, and yeah, the risks you absolutely need to be aware of.
Okay, let's start with that volatility. It's the name of the game in this sector, isn't it? Anyone watching crypto mining knows things move fast, but Cipher mining, it feels particularly electric lately. I remember seeing the stock, gosh, way back near its 52-week low. What was it, like $1.86?
Yeah, something like that. And the journey from there has been quite something. So let's get grounded. As of today, October 24th, 2025, the stock's at $19.86. That's getting really close to its 52-week high, which is around $22.
Yeah.
It just shows that massive outperformance from that low point you mentioned, the $1.86.
And look, it's just October, right? It dropped, what, 9.2% on the 21st? Pretty sharp, typical sector stuff. But just a few days before that, October 16th, it surged over 10%. What really caught my eye was how it seemed to outperform Bitcoin itself, even when the broader sector was feeling weak. So is that momentum real? Is it sustainable if it's moving separately from Bitcoin right now? Or is it just, traders getting ahead of the news about their operations? Does this decoupling mean more risk of a pullback?
Well, the technical picture, the structure underneath, suggests it's maybe more than just noise. It looks like a primary trend that the bigger players, the institutions, seem to like. The price is trading way, way above its key moving averages. You got the 50-day average down to $11.77, and the 200-day, that's all the way down at $6.12. That huge gap between the short-term and long-term average.
Right.
It's like that golden cross pattern, but on overdrive. It's textbook structural strength, the kind that institutions look for.
Right, and the momentum figures seem to back that up. We're seeing reports showing 17 green trading days in the last 30.
Yeah, that's 57% of the time.
And it's happening with really high volatility, too, around 21.15%.
Exactly. And that combination, more up days plus high volatility, often signals aggressive buying, potential accumulation. But, and this is the key thing you need to remember, that high volatility cuts both ways. It definitely means sharp pullback risk is there. So yeah, expect it to move fast, but be ready for those sudden drops like we saw on the 21st. The market's trading the news cycle here, not just the long-term story.
Okay, so the chart looks strong, the momentum's there, but like you said, people don't just buy a chart. What's actually powering this? What's the engine?
Sounds like it comes down to a facility called Black Pearl.
Precisely. The story is really about scale and, crucially, execution, turning plans into actual results. If you look at their update from July 2025, Cipher Mining announced a really big step up. They boosted their Bitcoin production for the month to 214 BTC, and maybe even more importantly, their operational hash rate jumped significantly to 20.4 exahashes per second. EHs, 20.4 EHs. Help put that number in perspective for us. Sounds big, but compared to others.
Oh, it is big. That 20.4 EHs puts them firmly, among the top handful, maybe top 3 independent miners in North America. It really shows they're doubling down on becoming a dominant player. And that boost came from getting phase I of their Black Pearl facility energized. That's 150 megawatts of power online. And that's only half of what they have planned for that site, right? The total is 300 megawatts. Successfully building out that kind of massive infrastructure and securing low-cost power, that's what really sets them apart from many competitors.
And they're managing their Bitcoin holdings alongside this expansion, too. So they sold 52 BTC back in July, probably for liquidity.
I'll refund them the growth.
But they still ended the month holding over 1,200 BTC, 12,219 to be exact. So seems like strategic treasury management.
Yeah, exactly. Now let's pivot slightly to the financials, the fundamentals. The revenue growth, the top line, it's genuinely accelerating. Their trailing 12-month revenue, TTM, is sitting at $158.85 million. And that's up over 19%, 19.26% year over year, comparing 2024 to 2023. That kind of growth definitely outpaces a lot of other miners.
Okay, strong revenue growth. But there's that net loss figure. TTM net loss of negative $154 million. That's a pretty big number in the red. How patient do investors need to be for Black Pearl to actually, turn that around into profit?
Patience is definitely required, but the market seems to be looking ahead, pricing in the turnaround already. While that loss is real today, the forward view is where the optimism is. You look at their forward price-to-earnings ratio, the PE, it's around 33.62. Now, that PE basically means the market is saying, okay, we see the loss now, but we expect you to be significantly profitable, maybe within the next 18 months or so. And that expectation hinges on the efficiency gains they should get from the massive scale-up at Black Pearl.
Right, and that scale, that operational focus, that's probably what attracts the institutional money, isn't it? They're running these big industrial-scale data centers in the U.S. focused on Bitcoin. They've got these low-cost power deals.
And the regulatory clarity that institutions need.
Yeah, it's almost like a high-growth utility company, but with a crypto angle. Okay, so we understand the current picture-strong operations, improving financials, albeit with that current loss. Let's look forward. What are the concrete events coming up, say, in the next 3 months, that could really move the needle on the price?
The big one, the most crucial date on the calendar, is the Q3 earnings release. That's scheduled for November 7th, 2025. This report is absolutely key because it's the first real chance for the market to see hard numbers validating the performance from Black Pearl Phase I. We're talking output, efficiency, cost structure. If those numbers beat expectations, it could really justify the stock's recent run.
Okay, so November 7th is huge. What else? Are there broader sector things we should watch?
Definitely. There are dates that impact liquidity and sentiment across the whole mining space. November 22nd, for instance, is a major ETF rebalancing event. That can cause significant flows in and out of mining stocks.
Right.
Then you have December 15th. That's the institutional buy disclosure deadline. We might see filings revealing big funds taking new positions or increasing existing ones.
Ah, interesting. Any operational updates expected?
Yeah, probably around December 1st, we'll likely get the U.S. Thanksgiving mining update. That gives a sense of how operations held up during a typically high power demand period.
Okay, those are the scheduled things. But this sector loves its speculation, right? What about the rumors, the potential upside catalysts that aren't quite confirmed yet?
Absolutely. And that's where some of the really exciting, though obviously riskier, potential comes from.
So spill the beans. What's the market chatter?
Well, there are sort of four main speculative points floating around. First, just general market rumors about potential M&A, maybe Cipher acquiring someone smaller, or even merging to boost efficiency further.
Okay, consolidation makes sense. What else?
Second, and this one's pretty interesting, speculation about new contracts for hosting high-performance computing workloads. HPC.
HPC, like for AI and stuff.
That's exactly. Renting out their data center muscle for non-crypto tasks, that would be a major diversification play.
Okay. Third.
Third is industry savory. Talk about them possibly deploying next-generation mining hardware, getting even more efficient miners online sooner than expected.
And the last one.
The fourth is kind of the ultimate institutional validation rumor. Unconfirmed reports that a major pension fund, or maybe an endowment, might be looking to take a significant equity stake.
Wow, okay. That HPC one, that feels like the biggest potential game changer, doesn't it? If they could diversify away from just Bitcoin mining.
It would be fundamental. Right now, their fortunes are heavily tied to the price of Bitcoin. If they start securing HPC contracts, they're essentially becoming more like a specialized data center provider, like a utility. That could mean much more stable recurring revenue streams and, crucially, less direct reliance on crypto price swings. That's a huge potential de-risking factor.
So what's Wall Street saying about all this? Are analysts buying into the story?
Overwhelmingly, yes. The consensus among the 9 analysts covering the stock is a strong buy. Although, interestingly, their average price target is $16.83.
Wait, that's below where the stock is trading now.
Yeah, which suggests the stock's run-up has actually outpaced the average analyst forecast. They might be playing catch-up.
So some analysts must be much more bullish then.
Oh, yeah. You see some street high targets reaching up towards $27.
$27? That implies, what, another 50-something% upside from here? Like 56% potential?
If everything goes right.
Right.
Yeah. Flawless execution on Black Pearl, maybe landing some of those HPC deals.
Yeah.
That's the blue sky scenario reflected in those high targets.
Okay, we have to balance this enthusiasm. What are the big risks, the things that could derail this?
Number one, without a doubt, is the volatile crypto exposure. It's still primarily a Bitcoin miner today. Their earnings are incredibly sensitive to the price of Bitcoin. If we saw an extended crypto winter, a prolonged downturn, that would hit their margins hard.
Makes sense. What's the other main risk?
Execution. It always comes down to execution in this business. They've done well getting Phase I of Black Pearl online, sure, but the entire bullish case, all that optimism, relies on them finishing the job efficiently and on time. Any major delays, cost overruns, or underperformance in bringing the rest of that capacity online, that could really trigger a downside move, no matter how good the chart looks today.
All right, let's try to synthesize all this. We've got the fast price action, the strong
It's
technicals,
driven by real operational scale-up at Black Pearl, accelerating revenue,
but still carrying that net loss for now, waiting for the scale to fully kick in.
plus upcoming catalysts, interesting rumors like HPC, but balanced by crypto volatility and execution risks.
So putting it all together, the overall investment thesis we're seeing in these reports, it still seems pretty positive, right? Like a bullish rating, maybe 9 out of 10.
That seems fair, based on the current momentum and institutional interest. It looks attractive for potentially two kinds of approaches. Given all those near-term dates, earnings, ETF stuff, disclosures, you could see this is interesting for maybe short-term trading, trying to capture upside from those events between now and, say, January.
And the longer term view.
The longer-term case is really anchored in that scale story. If they keep executing on Black Pearl, keep leveraging those low-cost power deals, they're positioning themselves to be a real leader, maybe even a cornerstone in the U.S. Bitcoin mining infrastructure space.
Okay, so here's a final thought for you, the listener, to mull over after listening to all this. Considering all that speculation, especially around high-performance computing, if Cipher does successfully land those HPC contracts, how fundamentally does that shift things? Could we look back at dips like that 9% drop on October 21st, not as just crypto weakness, but maybe as the last chance to buy before it stopped being just a crypto miner and became seen as something more stable, more like a diversified data center or infrastructure play, something to think about?